All right, Robert, I think you are the first guest we've ever had on here two times. So welcome to your
Hey, all right.
second Resource Insider appearance.
Yeah, awesome. Is there a cash prize with this, Jamie?
Well, we'll see how
How
the
about
next 45 minutes goes or
how
so.
about
We'll
a
see.
toaster oven,
We'll
something,
have a
some little.
Yeah, well, we'll get a viewer voting on what we should send you as a prize.
Yeah, a Nerf gun.
A
Yeah, that'll
Nerf
be
gun.
good.
So the last time you were here, about a year ago, we spoke a lot about energy, which is, traditionally your area of expertise. You're obviously a journalist who spent a lot of time focused on the energy world. But when we first met, we were just talking about this about a year ago here in Vancouver. You were really delving into copper, the energy metals, the critical and strategic mineral space.
Yeah,
Man, we've had a hell of a year on that. So you were ahead of the curve at just the right time and learning about the right things, and it's all the rage right now. And what I really am hoping to discuss today in the time that we have is what the hell is going on right now? What have brought us to this situation here today, and what we need to do and expect to be happening over the coming years? Because the people who listen to this podcast are primarily commodity and natural resource investors, and they're trying to get a lay of the land. Some of
sure.
them will be very, very up to speed on this, and some of them will be learning about it for the first time. So I'm hoping this will be educational on how the mining and minerals landscape is really shifting,
Sure.
particularly in the U.S., of course, but then also how that's having ramifications around the world. And before we start, I want to tell you one thing that really stood out to me that happened in the last couple of months. So you're probably familiar with the venture capital firm Andreessen Horowitz.
Yeah.
They're the, deca billion dollar mega VC fund out of Silicon Valley, sort of famous founders. They're on all the right podcasts and in the right political circles. They've backed the biggest tech companies in the world and made billions of dollars doing it, and good for them. But really interestingly, they wrote a thought piece, white paper, what have you, called It's Time to Mine, where they made a real argument. They kind of explained what mining is and how it works, but they made an argument that the United States in particular needs a vertically integrated tech-enabled mining company. So vertically integrated meaning you're exploring, you're building mines, you're operating mines, you're processing the material, you're putting out some sort of finished product, copper anodes, whatever it may be, selling into the market. And that's a very fragmented process today globally. Um, and so obviously tech-enabled, they're a tech investor, but then really focusing on what had to be built in the United States. To me, that is one of the most interesting things that has happened in the commodity sector in my entire career, because these are these are a group of people that have almost an unlimited access to capital and have historically had zero interest in commodity mining, natural resources, what have you. And I think that is really, really, really indicative of a phase shift that is
Yeah.
just starting to happen. And why I say just starting is because they're venture capitalists, right? Their whole purpose is to be somewhat ahead of the curve, right? And so
Yeah.
they're the first to move onto something. So my TED talk is over. What do you think about that? What does that bring to mind for you?
Well, I'll have to say I didn't know about this. I just pulled it up. It's time
Mhm.
to mine securing critical minerals. A16z.com is where I found it. It's Andreessen Horowitz.
A16D is Andreessen Horowitz. That's their
Yeah,
like
right,
other
right.
name.
Yeah,
Yeah.
and I'm just scanning it just as we're, and they're talking about rare earths, which I've written a lot about. In fact, I wrote about rare earths in my fourth book, Power Hungry, 15 years ago, and I made the point that China has a stranglehold on rare earths, and if the West does some kind of trade shenanigans, the Chinese are going to shut off the supply of rare earths into the
Hmm.
West. And I didn't have some crystal ball. It just seemed pretty obvious to me then. And what have we seen? Exactly that very thing play out. So, I mean, so rare earths, lithium, cobalt, nickel, graphite, copper, uranium. And the last thing in their table of contents is building the American mining champion. So let me start with the last one there, because I think, your point about, this idea that we're going to build a vertically integrated mining complex in the US. I like the sound of that, but I think in practicality, I'm not going to say impossible, but it's going to be really, really hard,
It's
because you're
a
going to
hundreds
need
of billions of dollar, if
exactly,
not
and it
trillion dollar enterprise.
and it will have to be sustained over decades with bipartisan support from Congress, which in a time when the U.S. Our federal deficit now is at just hit 38 trillion, something like that. We don't
Mhm.
have a lot of spare change lying around as a federal government to do this. And what will the government? How could the government incent private industry? Maybe, but we didn't back into this problem, and I think that's a fair way to think about it. The U.S. didn't back into this almost exclusive import dependence. It is exclusive import dependence on uranium, massive import dependence on copper, complete dependence effectively on rare earths, and the lithium pretty much the same. So we didn't get here overnight. We're not going to get out of it overnight. Even if Andreessen Horowitz throws tens of billions at it, it's going to take a
Mhm.
long time. So this is a strategic vulnerability for the U.S. and the West to overcome, and it will take a concerted effort to figure out how to handle this over a prolonged period of time. So I'm bullish on the U.S. I'm all in on the U.S. in terms of the U.S. in terms of the rest of the world and the advantages we have because of geography, cheap energy, rule of law, et cetera. But these are strategic vulnerabilities, and it's going to take a long time to overcome. So I don't know. Pick them. We could talk rare earths. We could talk copper. I'm fascinated by the copper market. I think the uranium market. I mean, just if we look at the headline today, and Trump and Putin come to some deal in Alaska, and there's peace. A peace deal on Ukraine. Suddenly, the uranium market doesn't look as difficult because the Russians are going to come back in a big way. So
Yeah.
yeah, I don't know where to start. You tell me.
Where to start? Well, I think one of the interesting things is the fact and kind of understanding why the United States actually sucks so much at mining, which is, you guys dominate in oil and gas, technology, industrial, so many other things, but there's very, very few mega mining companies within the United States. There's Freeport, big copper company. There's Newmont, big gold company. I know there are more, but I can't think of any. Like the Australians, Canadians, South Africans, a little bit the Brits tend to dominate in the mining
Yeah,
world. The big trading
yeah,
firms are in Switzerland. Big mining firms tend to be Australia and South Africa. And the United States, surprisingly, has totally let that industry pass them by and lost a lot of the expertise in that to other countries. What do you make of that? Do you think that the value is just not there? Do you think that it's been so hard to permit and mine in many states over the last decades?
yeah.
How do you wrap your head around that?
Oh, well, I think that's, the permitting is key. There's no doubt about that. And that, mining it's not a pretty business. And, you mentioned the foreign companies. So the the Resolution copper mine is the one mine in the US that's probably the biggest and most important one for copper
Mhm.
that could potentially get permitted and start construction in the US over the next decade. Well, it's owned, to your point, by Rio Tinto and BHP. So the Brits and the Australians.
Yeah.
And that project is a long ways from getting started. And as we talked about before we started recording, that copper ore deposit is a kilometer under the surface.
And it's in
So
Arizona, right? Do I have that
that's
right?
right.
It's in
Yeah,
Arizona,
in
which is a
Arizona.
very
Right.
permitting friendly state on the
Yeah.
whole, on the average. Yeah.
Right. Yeah. But there's Indian land involved, federal land, federal
Yeah.
permitting. And then to your point, you've got this Sierra Club, right, which is anti anything anywhere, right? And Center for Biological Diversity. The NGOs in the United States have a lot of power and a lot of ability to earth justice, which is really just an arm of the Sierra Club. And they have budgets of hundreds of millions of dollars. And they are very effective
Hmm.
at clogging things up. So, by contrast with the oil and gas, and I think this is a really a good point that you made there, the oil and gas industry, particularly since fracking started and hydraulic and the shale revolution, their footprint has actually has shrunk dramatically. And it wasn't because they wanted to. It's because putting drilling multiple wells from a single pad, from a single
Yeah.
surface pad, they'll drill one well and then scoot the rig over a few meters and drill another well and send it out the other direction and another direction. So the oil and gas, well, the alternative energy, solar and wind, their needs for land have increased dramatically and will forever
Hmm.
increase, because that's the only way you can produce more power with solar and wind is with a bigger footprint. Oil and gas footprint actually has shrunk, and will
That's
continue to.
interesting. It makes
Yeah,
sense, right? Because you're not doing the vertical wells where you got to basically pin cushion the environment. You're just doing the
you're
horizontal wells that
you're
stretch
doing
off for
horizontal
hundreds of
wells that
meters. And
you
that,
can
yeah, yeah.
direct them out for 2 or 3 miles in, now
Hmm.
is what the latest technology.
Is it
So,
that far, eh? Wow.
oh yeah, no, these laterals now that are being built, they're being drilled routinely in the Permian Basin and elsewhere, are miles long, and their productivity is enormous. And so, I think, and a lot of this is happening on private land, right? So
Hmm.
you don't, the Sierra Clubbers and the rest of the NRDC and the rest of these activist NGO groups don't have as much leverage. Whereas a lot of the mining is in the West, and a lot of that is on BLM land or
BLM
federal
land.
land,
Yeah.
and they're going to have to go through that federal permitting process. But I think that, just to cast it forward, Jamie, I think, what is the U.S., and I think Canada is the natural partner on this, is to form alliances, the US, Canada, Australia, and on rare earths, on uranium, on copper, and say we have to counter China's influence here, because China's dominance is so extreme, not necessarily in uranium, but definitely on rare earths, on copper, and increasingly on things like cobalt, right? That whether it's the processing, the refining, the finished goods, the magnets, and China has a near stranglehold on many of these critical. They're not critical minerals. I call them strategic elements, and that's a more accurate
Mhm.
term.
So this kind of leads me a little bit to where I want to go because
Sure.
when you talked about the delays or the challenge of building this sort of large scale integrated mining champion with the United States, the first thing that came to my mind was permitting, because it's not
Yeah.
just a federal issue, right? It's a state issue, it's a county issue, it flows down
Sure.
through all layers of government. Now, the Trump administration is both doing a lot of arm waving and proclamations on critical minerals, and very interestingly, very actively deploying money. Probably the thing that stands out the most to me and a lot of our viewers would be the large investment into MP Materials a month
Yeah.
or so ago. A company that mines materials for magnets. So this is starting to happen, but how successful do you like what I'm trying to wrap my head around as an investor is like how successful do you think the Trump administration will be in sort of actively actually pushing this agenda to building a national mining industry and maybe an international mining industry controlled by the United States, or at least whether the United States has a bigger footprint? That's part one. And then part two is, do you think that this is something that will continue or could continue in a post-Trump world, right? Trump's only
Yeah.
around for another 3.5 years or whatever it is, and then who knows, right? This is a very different agenda than has ever previously been on the table. Do you think this is our new reality, or do you think this is a blip? These are hard questions to answer, right? No, yeah.
Well, right. So you see, just in the last few days, the Trump administration has announced $1 or $1.5 billion to help stimulate rare earth
Hmm.
production in the U.S. And I would say that's a good start, but ultimately will probably be a drop in the bucket, because these projects are so capital intensive. You saw the DoD and now Apple both invested in MP Materials, at
Hmm.
the Mountain Pass mine in California, which I think is interesting and positive. But where is MP Materials sending their ore for refining? China. So, I see the interest. Yeah, okay, this is great, but what does that ultimately get us?
Yeah.
And further, I think that it's also important. And I wrote a piece on my Substack. It was called "China Runs the Table," and I had an image of the periodic table of the elements. and just showed which elements that China has a strategic stranglehold on. So, yes, we have the rare earth elements, we have cobalt, but we have antimony, we have gallium, we have gadolinium, or germanium, rather, forgive me, and tungsten. I think I counted about 30 different strategic elements that China has either a dominant or overwhelmingly dominant position in. So, and those and I'm really just taking data from the
Yeah, yeah.
IEA. I'm a reporter. I'm not an expert on anything, right? But I can read these reports and say, well, this is what the experts are saying. And China has been laying this groundwork for really for more than 30 years, ever since Deng Xiaoping took what was called the Southern Tour in the 90s and said, I can quote it almost directly. He said, the Middle East has oil. We have rare earth elements. We are going to exploit our advantage in rare earth elements. And they've been doing that now for all of this time. So
Yeah.
I think that it's, yes, we stand the possibility of a very short, well, this is the U.S. Short termism is our, it's what we do, right? We're really good at looking at the next quarter, the next, and the next
Yeah, yeah, yeah.
quadrennium. But thinking out 20 years or 30 years, as the China has done, very difficult.
Yeah. I mean, one of my theses in our newsletter for the last couple of years is that the United States needs its one belt, one road policy. And not just the United States, right? Canada, Australia, Europe, the Western world. If they actually want to kind of wrestle that control from the grip, they need you can't expect corporations to compete against a country, right? It
Yeah.
just country corporations need to make money, countries are looking to control assets. And
Yeah.
so Western corporations only have a chance of competing if they're supported by Western governments.
Well,
And
and therein lies one of the key challenges is that, I have plenty of criticisms of Trump, and I think his instincts on energy have been right on the dot. I think for particularly on
Mhm.
the nuclear front, on keeping coal plants open. But look at you Canadians. I mean, he's been
Yeah,
trashing Canada. He's been trashing Canada over
I
and
think our
over again.
tariffs are more stringent than China's right now, actually,
And
on
and
Canada.
that's total bonkers crazy town. And he has done the same stiff arming Albanese in Australia. And I think, then who are you counting on to come to be our staunch allies? These are large resource rich countries that have been our allies for decades, if not centuries, in the case of Canada, and yet Trump is alienating them. So how do you, I mean, how do you turn that around? After all of this nastiness, and then you're going to turn on the charm offensive and say, now let's make a deal. I mean, I think that might work with China or some of these other places, but I think that rightly the Canadians could feel slighted, and I don't blame them. And so why would we deal with you Yankees now?
Yeah, well, I hope that's not the case. I
I
do
do too.
hope that the geographic and geological reality sort of sets in,
Yeah.
and like-minded parties get together and say, look, if we want to get serious about this, the United States has the money, Canada has the resources, Australia has a lot of the expertise. Let's kind of get together and figure out a way to compete on a global scale. Let's talk about and get into what an actual stranglehold China does have today. So, where do you see the biggest risks to the United States, the Western world, in terms of what China controls and why?
Well, I think it's clearly the rare earths, and you have they control today, not my numbers, the numbers, the Department of no, this Department of DoD study. I think it was from 2022. China now controls 90% of the global market for neodymium iron boron magnets.
Hmm.
So these are the term of art is coercivity magnets. So these are the high strength magnets found in electric vehicles, in wind turbines, and a myriad of consumer products, but more particularly in defense applications, missiles, guidance systems. The F-35, all these advanced airplanes are loaded with neodymium iron boron magnets. And the one of the things that is most concerning about this is that when you look at the IEA's projections on what they call the refined material production for rare earths. They say it's going to remain highly concentrated in a few countries, and that's China. So they're actually predicting that China's control over rare earth elements will increase over the coming years. So,
Yeah.
and
But I
then
think
this is a
they
country
don't
that
just control the rare earth elements, right? They control the rare earth processing. Isn't that
exactly.
the real bottleneck there?
Well,
And
it's the
this is,
processing and the fabrication, right? And so, when I wrote about this back a few months ago, it was when Trump's first term, when he started threatening tariffs with China. Within a couple of days, Xi Jinping went to a rare earth element company it wasn't in Xinjiang, it was in China. And a few days after that, there was an editorial in the People's Daily that said, by the way, if there's a trade war, don't be surprised if we, retaliate with rare
yeah,
earths. So this is a very difficult thing to unwind.
yeah. And I think a lot of people don't understand the cost of that, right? Because the cost of the process, so processing on average doesn't make money in most
Yeah,
mining supply chains, right? So this is the
yeah,
refining, this is the smelting. These are like break-even businesses in many cases, or low margin businesses for a lot of these companies. Now, there are obviously strategic choke points because one smelter is serviced by dozens of mines, maybe hundreds of mines, but they often lose money. Most of them, or I should say, many of them are built with government subsidies or government backing around the world. The other thing is so much of this processing technology can be very, very environmentally destructive, right? The waste products from these, whether they're radioactive, whether they're extremely toxic, whether they're stored, it's either very toxic or it's very expensive to do properly.
yeah.
And I think this is an area where China, on average, has been willing to make sacrifices that the Canadas, United States, and Australias have not, right?
Yeah.
And I think that's like an interesting question. Is there a world where we are going to have to at some point say we maybe need to relax environmental regulations if we're going to compete and have these critical elements that service our defense industry, service our general way of life, or else we're in a really vulnerable position. I don't think we're there yet, but I wonder if that's going to come.
That's a really an excellent point. And I've been very fortunate. I've been travel a lot, and I was in Australia. And in fact, I was in Adelaide and then in Perth, and was there for 2 weeks. And I talked to a lot of mining folks. And one of the points that was made to me by a top mining official was that, well, the one of the key issues with rare earths and the rare earth refining is that you end up with a radioactive waste stream,
Yeah.
right? And that's a real problem, right? Because when you say radioactive, people's brains just fall out of their heads and they just lose all
Hmm.
sensibility, regardless of the level of radioactivity. So that's key, right? And you're right that it's true in the copper mining business where the refiners are just punishing the miners, right? And but I just wanted to run through. So you've got samarium, gadolinium, terbium, dysprosium, lutetium, scandium, yttrium. This is in April when China started restricting the exports of all of those elements, and it also restricted magnet exports and required exporters to apply for special licenses. So they also restricted export of any magnet fabrication technology. So yeah, you have the ore, you have the refining, you have the and processing, and then it's the fabrication as well. So if you're Volkswagen or Tesla or you're Lockheed Martin, you need a magnet that has a certain form factor, right? A
Hmm.
neodymium iron boron magnet that's doped with terbium and dysprosium. They have a certain form factor that they're after, right? It has to fit
Hmm.
in this motor and this, so that's where China has a stranglehold as well. So Trump's trade war spawned what was a global spasm in the entire auto sector. It wasn't just the
Hmm.
U.S. They restricted exports to every country in the world, including India. So, this is where the tariffs. I think I can see the rationale for them, but they had a lot of unintended consequences. I think, and a lot of countries that are considering themselves bystanders are going, "What the hell? We're getting punished for something we didn't have anything to do with."
And I guess this is what I'm spending a lot of time right now trying to think about is is this trade war like a small scale spat? It's going to be over in a year or two, and things will go relatively back to business as usual? Or does this shift, like, is this a wholesale retooling of the United States? America, is going to be great again, and you're going to bring back manufacturing, and you're going to bring back mining, and infrastructure is going to be rebuilt, and et cetera, et cetera, et cetera. What do you think? I know I'm asking you to kind of bet there, but what do you think will happen?
Well, I want to talk about copper because I think copper is such an interesting element for a lot of reasons. But I could argue it both ways, Jamie. And I
Yeah,
don't think
I know. That's the problem.
I don't see mining coming back in a big way in the U.S. Honestly, I just can't foresee something that is going to require, as you know, for a lot of these mines, such long lead times that we're talking. S&P Global did an analysis recently that estimated that now mines that begin applications now will likely be 20 years before they actually start producing. I mean that's an
Yeah,
eternity for capital to wait
which
that
is
long,
pretty
right?
average for a copper mine, which is
Yeah,
pretty average,
right.
unfortunately, from
But but the
discovery to
but the
for
other but
permitting.
the other thing here that to me is just a black box is, well, what about China? And so just for example, copper, half of the world's copper is consumed in China.
Yeah.
And if you read someone like Peter Zion, who thinks China's going to fall off a cliff any day now, right? And
Hmm.
he's been wrong on a lot of things, right? But if China slows down, China catches a cold, the rest of the world is going to get the flu, right? Or if they sneeze, the rest of the world. So there are so many variables. It's a really an uncertain time. And, I think that in some ways, Trump's instincts are right. And in other words, I think he's really playing with fire. And then on the other hand, I could say, well, China's going to look around and say, we cannot lose access to the US market. We have to be able to export into the US market because it's so
Yeah.
important to us. So, but the longer term damage, I wonder, I think, China is always going to be ready to do business. It's kind of my own, like I'm no expert, but right. That's what
Yeah.
they're about, right? They're very rational. But how long will the Trump effect last against our allies in Europe? Right? How long will they be alienated, and how long will they remember it? And the same with Canada, right? Are these going to be hurt feelings that last for decades, or will everybody say, okay, never mind, we're back to normal again?
Yeah, it's a really good point, right? Because whilst China controls a few elements, obviously, that you've discussed, they're the biggest consumer of a lot of copper, steel, iron ore, all these things. And like, if that
And
goes
rare
away,
and
yeah.
rare earths, right? So a lot of this is in their own self-interest for their own domestic manufacturing. But now India's rising, right? A lot of manufacturers, Apple included, are saying, well, we're going to hedge our bets. We're going to move some of our production to India.
Hmm.
But now Trump has kind of pissed off India as well. I mean, let's make a list of the countries he hasn't pissed off. It'd be easier to go that
Yeah.
way than work the other
Yeah.
direction.
Yeah. Only Russia. Russia seems to like Trump more than his predecessor.
Oh, that's brutal. Yeah, but yeah, but again, there's the Russia question. If there is a peace deal in Ukraine and Trump says, okay, you quit this, silliness in Ukraine and we'll do business. And I think that if I were Putin, I'm not, but that would be a pretty tempting deal, right? To
Do
say,
you
okay,
think
well,
Trump can open up the gas like the gas into Europe again? Do you think he can soothe Germany's wounds and get them buying gas from Russia again?
well, yeah. I mean, the Germans are going to act in their own self-interest, right? Will
Hmm.
they will the Nord Stream be rebuilt, or is there a permanent effort to keep the Russians isolated? I just my own, I don't claim any geopolitical, crystal ball or expertise, but Russia's natural resource endowment is just so large, including uranium. I just don't
Yeah.
see how you keep them isolated forever. And you see them already selling oil to India, and the Indians are saying, we need the Russian oil. We love you, America, but we're going to look out after our own interests. So, and but can we talk about copper for just a minute? Because I think
Did I
when we
derail
had
us? Yes. Let's go back to copper before we touch on gas.
when we met in Vancouver, you made a really good point about copper that I hadn't thought about before because um, well, I've seen mines from the distance and so on, and the scale of them for copper is just enormous. You made a really good point that a small gold mine can be profitable because the end product, a few ounces, it's worth a lot of money, right?
Yeah.
So you don't have to move as much material, right? So you really underscored for me the volume and mass challenge, right?
Hmm.
With copper versus gold, and further with copper, the amount of volume that you have to move is just staggeringly large to get an ounce of copper, a pound of copper, relative
Hmm.
to an ounce or a pound of gold. And as a brief side point, I was one of the reasons I was so happy to talk to you last summer was that I went to Chile last October and I spoke to a mining supply company, Sigdo Coppers, and they found me and I was glad to be invited. Of course, who wouldn't want to go to Chile to have be paid to go down there? And I gave them kind of my analysis of the global market and all these predictions. Oh, we need to double copper production globally, et cetera, et cetera, et cetera. A lot of bullish calls on supply. And after I finished, we were having a reception. One of the guys from Sigdo Coppers came up to me and said, "Okay, yeah, I've heard what you said. Double production." And it's a Chilean guy. It's spent his whole career in mining. He said, "Double production, man. We're doing everything we can. We're sprinting like hell just to stay flat. We're not going to double
Yeah.
production. We can't because the ore volume is increasing because the ore quality is declining." And this is what we've seen all over the world. And your point was that because the volumes are so large, the capital costs are just staggeringly large. And so that to me suggests a bullish long-term case for copper, which I've heard for, I don't know, 15 years. And
Yeah.
but is it
That's the
but
counter. You've heard it for 15 years, and when's it going to happen, right? When is
yeah,
copper going to $10 a
yeah.
pound?
Yeah,
It's an interesting market, right?
tell me when and what the price will be, and then I'll place my
Yeah.
bet. Please tell me.
It has a lot of constraints, right? Especially where you are, right? In Chile. They've been mining those mines for 50 years now, sometimes 100 years, and they've just been going deeper and deeper and deeper and deeper. And, the primary cost in large scale open pit mining is energy. It's diesel, right?
Yeah,
So every meter they go down is a meter they got to haul back up. And so the cutoff grade required to be profitable gets higher as you go deeper, or the price has to escalate.
yeah,
And we haven't done a very good job. In fact, we've done a horrible job of replacing those reserves that have been depleted globally. I can't remember the numbers off the top of my head, but it's something like 30 or 40% of global copper comes from primarily Chile and then followed by Peru.
right.
Those reserves haven't been replaced. There's the not Oyo Toivu in Mongolia. There is Kalua Kamoa in Zambia, or not in Zambia, in the Democratic Republic of the Congo. And then the last real frontier for copper is probably Kazakhstan right now.
Yeah,
And that's where really all the majors are starting to deploy exploration. But to your point earlier, it's a 10 to 20-year wait from a discovery to put a mine into production. And it's a highly, highly inelastic sort of supply chain within copper. So if there ever is a spike in demand, which, we hope there will be as a mining investors, and we expect there to be, it could go up a lot really quickly. But people have been saying that for a long time. People
yeah,
have been saying that for a long time. And you
yeah,
said something to me in that initial conversation that I had never thought about, which I thought was a brilliant framing, which is the price of copper priced in gold. So somewhat controlling for inflation, I think is as cheap as it has ever been in any time in human history. So it's actually been, deflating in value over time, despite these, increasing demand.
yeah.
So,
Well, and I think actually, I don't know that I priced it in gold. I think I just did it on an inflation adjusted basis, right? That
mm,
if you look back 20 years at the price on, per pound or per ounce or whatever, and you adjust it for inflation, it hasn't gone up in price, right? Which is remarkable because it's kind of, Julian Simon, was he right? That it's always going to get cheaper. You look at oil and gas, petroleum and natural gas, it's incredible, right? On an
mm,
inflation adjusted basis, natural gas today is selling for, I've done those calculations. I think it was like $4 per million BTUs in 1990, and today it's selling on the strip of the Henry Hub is $3. So, or less than three. I haven't checked the price today. But yeah, here's the S&P. I wrote a piece on my Substack. It was called Dr. Copper Takes Off. I wrote this in July, and is this really, is copper investable, right? And I did a deep dive with 11 charts, but the S&P global report that came out, when it was earlier this year, the average lead time for new mines that have started production since 2020 is almost 18 years.
It's wild. So, Robert, we've had you for a little while now on here. What is it that, is there anything that you're worried about? Anything that you see that you think, you talked about writing about rare earth metals, rare earth elements rather, or something like 15 years ago.
Yeah.
Is there anything on your radar today that's coming up in your research that you think people should be concerned about or will become a concern over the next decade that you don't think is talked about enough?
Well, how long do we have, Jamie?
Got as long as you want.
Well, let me make just a couple of quick points. Here, I want to read this one thing from the S&P Global report. This was
Okay.
about the delays in mining, and this is Paul Manilow, I think is his last name. He said, fueled by longer exploration, permitting, and studies phase, and a longer period between the end of feasibility studies and the start of construction, which could be attributed to time spent obtaining financing. He goes on to point out that this is what's driving these long lead times, right? That these permitting delays aren't just in the U.S;
Yeah.
they're all around the world.
And getting
And then
worse.
right, and then he says an example is the Bits Sequoia mine in Russia. The copper mine took 32 years from discovery in 1986 to startup in 2018. So
In
this
Russia.
in Russia. So this isn't just a U.S. issue around permitting; it's a global one. And further, just one last point, and I made it in this. I did a chart on it. I grabbed it from Wood Mac, that China, essentially all the new investment in copper smelting since 2000 has been in China. There's been no investment in copper smelting outside of China since then. So what concerns me, it does concern me, the global rivalry between the U.S. and China, and the possibility that something stupid happens and we get in a shooting war there or with Taiwan, around Taiwan. That's a real concern. But I'll also say that, the other thing that is my near-term concern is inflation around the electric sector in the U.S., and particularly for the strategic inputs like high power transformers, breakers, switchgear, the turbines themselves. I was in Minnesota last week and I heard the Xcel Energy executive say that the lead time for new gas turbines, this is from a top executive at Xcel Energy, one of the biggest investor owned utilities in the US, is now 6 to 7 years. And then you
What?
have,
To
yes,
get a
yes.
6 to 7 years. So if they haven't pre-ordered for year, they're hooked
So,
right now. So when they
so,
talk about
so
this gas powered data center revolution, that's the real bottleneck here.
if they want to get an order in, they today the order book for GE Vernova, Siemens, and Mitsubishi, according to him, was 6 to 7 years, which is much longer than I've heard before. I've heard consistently 4, maybe 5 years. But
Yeah.
for high power transformers, it's 4 years. And I heard this from a top salesman at PTI Transformers, which is based there in Winnipeg. So not only are the wait times in getting very long, the inflation in those is in some cases 30%, right, in the last 2 years just for transformers. We're seeing the same kind of inflationary effects on the EPC side, that is in the construction
Yeah.
area. So this race to provide enough power to the U.S. economy, and including data centers, that's something I've been looking at very closely and will be writing about because I find it fascinating from a number of different angles. Sufficient supply of labor, but also these critical commodities. I hate to call them commodities because they're sophisticated machinery, but they are ultimately all the kit that you need to build new power plants. That inflation I see is going to continue for years to come.
What is
But
the implication of that? Like, why is that important? Is it just it gets more expensive to buy it to pay for power costs, or are we at risk of falling behind on AI development? Where do you see the real damage being done by this?
Well, I think both of those are real. I mean, we're already seeing dramatically higher electricity prices in the U.S., which is a regressive tax on the poor and the middle class, and that's something that's deeply concerning to me because the working class in America is dramatically underrepresented in politics, right? And this
Hmm.
is something that is going to hurt the entire economy. Second, I think it's, to your point about data centers that, I was spoke in Jacksonville this week, and Paul Nakasone, the former head of the NSA, was there, and he's a former four-star general, and he was talking about the deployment of AI in the U.S. as a strategic imperative to counter China, and to make that happen, you got to have a lot of juice. So the race is on. I guess that's how quickly can we build all of that capacity for new power and all the data centers and everything else when labor is at a premium. And the
Yeah.
knock on point is, will there be enough gas, natural gas, to go around? Because all of this AI is going to be fueled by gas.
So is that your view that the first step is gas power to fuel this? That I mean, there's a lot of hype going on about nuclear in the United States right now, especially the small scale reactors. I know a couple people at some of these startup companies with insane valuations and no prototypes.
Yeah.
My view is that's a decade away if they're lucky, and probably longer to roll out at any scale. It's gas then, right? That's powering this.
It has to be. There's nothing else that you can get permitted. We're not
Okay.
going to build new coal plants in the US. Solar and wind and batteries, yeah, okay. Solar, wind, and batteries, blah, 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 blah. You're not going to run a 5 gigawatt power plant like Stargate is building in Abilene, Texas, on solar, wind, and batteries. I'm sorry, it's just not going to happen. You're going to have to burn a lot of gas. So that's where the pressure is on the economy. I mean, the broader energy infrastructure in the US is
Yeah.
how much gas is going to be available? Will it be deliverable? And particularly during peak times, during crunch times, cold winter in Minnesota that lasts, or cold spell in winter in Minnesota that lasts not just a week, but 2 weeks. Well, is there going to be enough gas that you can deliver to customers then? So AI, the entire AI thing is a natural gas story.
And so, okay, let's think about how this works, right? Because obviously, the first step what these data centers want to do is they just want to plug into the grid, right? They want
Yeah.
to set up a data center an hour outside of a city in Texas or wherever, plug into the grid, buy power. But they're running into problems with that now already, right? That the grid
The
can't
the the
physically support them.
the juice isn't available. So they're going to have to self generate, or that they're going
Hmm.
to build their own power plants and then sell any excess into the grid. But that's what we're already seeing.
So this
That
is what do they call behind the meter power, right? Is that right? Do I have that
some
right?
of some of it may be behind the meter, but if you look at Louisiana, I think it's a 1.6 gigawatt power plant that Entergy is effectively going to custom build for Facebook or Meta, right?
So
But
they
they've already
build the power plant. Where is it get do they have to own the gas fields as well too? Do they cut deals with the oil and gas companies for an offtake? How are they actually getting the
uh,
the energy product put through that
well,
plant?
one project that I'm pretty familiar with because I have a family member and my nephew worked on it. Williams, which is a pipeline company based in my hometown of Tulsa, they in April, I think it was, announced a $1.6 billion power supply deal for a hyperscaler. So that's not they're not going all the way to the wellhead. They're not going all the way upstream to the drillers, but they're going to the midstreamers
Going to
and
the
saying,
midstream company.
"We'll we'll
Okay.
we'll, we'll cut a deal with you. You deliver us the gas, and we'll build the power plant, and or we'll own the power plant." And one quick anecdote, and two anecdotes, as you know, means data. But in in March, Energy Transfer, which is the biggest pipeline company in America, in their investor deck, so they'd been contacted, I think it was by 70 data centers in 12 states. In May, in their May investor deck, it was 200 data centers in 14 states. So, the
Hmm.
data center developers, and I've talked to people at Energy Transfer, and they said, there's a maybe 10%, maybe 20% of this, these projects will get built and deployed. But still, you just look at that one, data point, right, where this comparison for Energy Transfer, and it's indicative of this broader shift by the hyperscalers, by big tech, to say, we're going all in on, and they're not going all in on gas. They're going to be using some nuclear, Amazon and in Pennsylvania at the, well, let me see, Microsoft's doing 3 Mile Island, Amazon's Susquehanna. They're going to invest in nuclear, but nuclear ain't coming on fast enough for them to meet their demand.
I have like a mild obsession with vertical integration coming back into the commodity sector. I think
Can wait,
for
wait,
my whole,
can an obsession be mild?
that's
I
a
mean,
good
it's like
question.
you're all in or not, right?
Yeah, it's a healthy obsession, shall I say? Healthy. It's not broached into the unhealthy territory
Yeah,
yet,
okay,
where it's
that's good.
consuming
Yeah,
my
keep
life,
yeah,
but it's a healthy
yeah,
obsession.
keep it healthy.
So I have a healthy obsession with the vertical integration in this sector because mining, oil and gas, many other industries through my entire life have basically been broken into smaller and smaller silos, right? They're broken into their smallest conceivable parts, right? You have fewer energy companies that, drill, own the pipelines, own the power, that fully vertically integrated thing you might see with
Yeah.
an Exxon or a Total. Most of them there's drilling companies, there's pipeline companies, there's E&P company, whatever. I wonder, since so much wealth has accumulated over the last 2 decades in the tech sector, the only money available globally to really develop these things is coming from either tech or from government. That's kind of been my thesis. And so, we see this to a degree already with the Amazons and the Teslas, where they're going and they're owning their full supply chain. And I wonder, like, is this going to come happening where the Googles and the Facebooks and the whatever are eventually going to own oil and gas wells, or at least, if not own an oil and gas well, own the entirety of the offtake of it. So it's like, maybe XYZ Corp will operate it day to day, but I've sold my entire offtake to Google and they pay me X dollars per barrel or X dollars per MCF and away we go. I wonder if that's going to happen. I think it is, but I want to know what you think because you spend a lot more time researching this sort of thing than I do.
That's an interesting take, Jamie. I like how you're thinking about it because it's a one that I haven't considered. Is it possible that, say, Google would buy a gas field from EQT, maybe, in Pennsylvania, and to fuel a data center in Pennsylvania, right? And there have been big
Yeah.
announcements in Pennsylvania to build data centers there, Homer City being one. Um, but as you say it, my first response is I think they'd be more likely to buy a nuclear company, right? So
Yeah.
if you look at, I spoke in Jacksonville, Florida. Was it yesterday? I'm trying to remember where I've been lately. And I presented a slide there, and a friend of mine, Mike Steffes at Aces Power, first came up with this idea. He'd looked at the 108 biggest utilities in the U.S. that are publicly traded, 108
Hmm.
electricity, gas, and water utilities. Their combined value, and this includes NextEra, Duke, Constellation, all the biggest utilities in America, is about $1.6 trillion. The five big tech companies, Facebook, Google, Amazon, Apple, and Microsoft, are worth $14 trillion. Their value of the big tech companies is 9x the combined value of the biggest publicly traded utilities in the U.S.
Yeah.
So,
Yeah.
but
And I'll
I'm
add to
making
that.
that.
I think the entire metals and mining industry is valued about $4 trillion to put that in
Yeah,
comparison to.
right. So a Google, or or Bezos, or any of these, Zuckerberg, they could buy, for instance, Oklo, which is publicly traded, and I just looked at their market cap's $11 billion. They could buy them for money they spare change in the pocket, in what they've
Hmm.
got hidden in the couch cushions. This is not something that, because their capex is so enormous. Those four of those companies, take Apple out, in the second quarter, their capex is going to be nearly $100 billion. So I could see, it's an interesting thought, but and Microsoft, remember, is doing a deal with a fusion company, and they started
Hmm.
building that project.
Yeah.
So I think that way you're thinking about it is a good one, and where they say, well, hell, if we want to keep talking about climate change and green this, green that, we need to vertically integrate our power system. Let's buy a nuclear company, and that way we control the whole damn thing.
I'll tell you something. So this is going to sound idiotic because it is. As someone who spent their entire adult life working in commodities, I've always been praying that every commodity price that I've ever worked in goes higher. I want gold to go up. I want oil and gas to go up, iron, whatever. It's only recently that I realized that the rest of the world is actually hoping that those prices go down because it makes their life a lot easier and makes the production and manufacturing of everything else in the world cheaper if we have cheap oil and gas, cheap energy, or not cheap energy, cheap materials. And so that's really that very basic revelation is what's driving this. Like, eventually, I feel like the tech companies are going to just disintermediate the profit margins of all these energy companies and just basically own it for as cheap as possible at the source. If energy is the bottleneck to the AI race, to me, it's like then priority number one is getting as much energy at as low a price as possible, and that's what I would be thinking about how to do that. And I'm
Yeah,
sure there are some very, very smart people at those companies who are contemplating similar issues.
yeah. It's an interesting observation, Jamie, and I like where you're going. But here, let me just, a thing that pops in my head is, yeah, but the operation cost of the data center, the energy is important, but it's not
Yeah.
maybe their biggest overall cost. And
No.
that's not their core expertise. But you have a
Yeah.
lot of, let's look at Google by itself. They have a lot of savvy people, and if they don't have them, they can hire them. And so I do kind of think that there I could see that kind of scenario where they'd say, well, hell, let's go ahead and buy an Oklo or Terrestrial Energy, which is planning to
Yeah.
go public, or here in Austin, Alo Atomics, which has an interesting, set of micro reactors that they're building, and or Microsoft saying, well, we invested in this fusion company, let's just buy the whole damn thing.
My inclination is to think what they're doing is buying long-term offtakes
Yeah,
from mines, from energy producers of various types. There's a good parallel for this in the nuclear industry. Most nuclear energy producers don't own uranium mines. I don't know if any of them own uranium mines, but the uranium buying is almost entirely done on long-term, multi-year offtake agreements, right?
yeah,
And so, because the input of uranium is such a minuscule price compared to the other costs within nuclear production, that are relatively price insensitive if uranium's $25 a pound or $100 a
yeah,
pound. So they just build in
right.
these offtakes. I think we're going to see more of that. That's kind of my where I'm leaning towards. And I just think,
So,
if that's going to happen.
to clarify, you're saying the nuclear companies will then invest in the upstream in the uranium market.
No, I'm saying that other companies are going to apply that long-term offtake purchase approach to other commodities, whether it's natural gas or oil, whether it's nickel or copper. I think, the Amazons of the world or these are going to go to these people and say, we're going to buy all of your production for the next 5 years at this
Uh,
price. I
I
think
see.
that's what's
Right.
going to happen. Yeah.
A PPA for whatever that commodity,
Effectively a
critical.
PPA, yeah, which
Yeah.
is the power purchase agreement for people
Right.
not
Yeah.
familiar with that term.
Right. Yeah.
Yeah.
That's interesting. Um, yeah, I like that. I like the way you're thinking about that. So, well, let me ask you now. This is your podcast, but I'm going to disintermediate here.
All right.
So,
I'm ready.
which is the old Enron term, by the way. My first book was on Enron. We're going to disintermediate those guys. So, what's your call on natural gas? My brother, I've written about this before. My brother Wally, who I love dearly, is a permabull on natural gas.
Mm.
But today, I should check the price before I say this. I think Henry is under $3. It's shouldn't be this cheap, but it still is. And come on here. Henry Hub today, the front month is $2.83. It's
So
like
I'm a bull on natural
it's
gas as well. I'm a bull on natural. I'm also heavily invested in natural gas, and it's really hard to bet against your incentives there. But I'm a bull on natural gas for a lot of the reasons that we've discussed in this podcast. I too believe that the only way to meet the United States' electricity demand is going to be largely
yeah,
natural gas. All these export facilities that are finally getting approval and getting construction should pull some supply out of the market and off to Europe.
yeah,
But I'm also aware that natural gas exists in the world as a whole and not just the United States, and that there's a lot of things that could change that pretty quickly.
Yeah, yeah.
What do
And
you
and
think?
and and
Am I
and,
right? What do you
and
think?
fortunately, I can argue that this both ways. And I mentioned my brother Wally, who's a CPA, and he's an avid trader and observer of the markets, and very savvy, and been successful in business. And he said, "Well, eventually it has to change." And I said, "Well, I agree with you. Eventually it has to change, but tell me the price and tell me the month. That's all I want to
Yeah.
know." And so let me give you the case for lower prices first. So the drillers, as I could do the inflation adjusted price on Henry Hub, the drillers are just shown their incredible proficiency at getting those damn molecules out of the ground. We
Hmm.
talked about these long extended reach horizontal wells, of 2-3 miles, and that we're producing more and more gas with fewer and fewer rigs. And the industry is, as just, it's part of what it's smaller, faster, lighter, denser, cheaper, to use the title of my fifth book. And this has been the history of the oil and gas industry. Second, we could apply the same smaller, faster, lighter, denser, cheaper to AI and the data center race, where the history of the computing business has been smaller, faster, lighter, denser, cheaper. From the days of ENIAC, when they flipped it on, it dimmed the lights in Philadelphia when they turned the thing on. It used so much power. And now we're using, infinitely more computing power for infinitely less watt per flop, or however you want to calculate that.
Yeah.
So maybe I'm just going to posit that maybe we're going to be overbuilding data centers, and that the AI won't need as much as everyone says. And you have the Russians then suddenly bringing gas into the global market, and that LNG supply that everyone thought was going to, exporting 12 Bs or 20 Bs a day, is not so robust. Okay, so that's my bear argument. Now I can make I can make the bull argument. Oil prices go down. That looks, the forward strip is looking very bearish.
Yeah.
That reduces production in the Permian, where you're getting now 19 billion cubic feet a day of associated gas. Suddenly that becomes 10 billion. LNG exports continue. Domestic demand continues to rise. We have a cold winter. Suddenly, what's today sub, $2.80 could be double that number. I so
Hmm.
I mean, I can. This is my problem. I have two hands. I can
Yeah.
see it clearly both ways.
It's hard to say. And you're probably both right. Like I do agree with you that the data center we're in a data center bubble right now, right? I think that's going to be overbuilt.
And that's not a, and
Similar
that's
to
not a,
how fiber optic was overbuilt
and
previously.
that's not a popular view.
But then it's going to be filled, right? And that
Yeah,
so it's like any commodity, right? It's like, what is the expression? The cure for low prices is low prices, and the cure for high prices is high prices. And right now, prices are at least projected to be high, or there to be supply constraints, so they're going to build it out, and then that'll fix that
yeah,
problem, and we'll have
yeah.
another
And
one to
and
address.
and the front month for, or I'm sorry, it's not the front month. But the near month price is 282, and the price for January of 26 is $4.18. And the forward strip for December of 26 is $4.46 for Henry Hub.
Yeah,
So,
yeah. It
that's
tells you
not
where
double.
people think it's
It's
going,
where
though.
it's where the sentiment is, right?
Yeah.
So I the good thing is that if I step back, and this is a slide that I regularly present when I'm giving presentations, is the U.S. At whatever that price is at Henry, we still have a massive price advantage over the rest of the world, and the same is true for Canada. We are, Henry today is at 283, and what's JKM? I'll give you the JKM is the Japan Korea marker price of LNG into the Asian market. Today is $11.93. So it's three times cheaper. Natural gas is three times cheaper, more than three times cheaper here in the US than it is in Asia. And then it's about the same for TTF, which is the European marker. It's $11.23. So
Hmm.
one of the reasons why the US economy has been so robust and recession, I'm not going to say recession proof, but recession resistant, is we have a massive energy price advantage over the rest of the world.
Well, that might be a good place to leave it. I think we've been at it for an hour now.
Well, as you
I
know,
don't
I'm
know if we're
sure
going to solve this problem today.
no, but I like well, I greatly enjoy talking about it because obviously I'm a reporter and I want to report on these things, but I also have to take it for a few spins around my own brain about how do I hold the problem and think about it, and how do I what's a realistic way to think about these issues. And one last point on the gas issue, my nephew who works at Williams, his line is, don't bet on the price, bet on the volume. And so it's
Yes.
something I've presented on and written about on my Substack, robertbryce.substack.com, is buy the pipelines, right? And so that's something that I think as an investment is makes a lot of sense to me because I cannot predict, I think it's a fool's errand to try and predict the price, but it's very clear that the demand is, again, the consumption is going to continue rising both for LNG exports and domestic consumption. So bet on the toll takers. And I think that's a reasonable, I think a very reasonable way, and one that I've played myself because I'm an old guy, I'm, turned 65 this year. I don't want to take, too much risk. I want to make, they're going to pay an 8% dividend. I can understand that business model. I like that.
Yeah. Well, it's an approach we've taken similarly in our newsletter. So we've invested heavily in infrastructure. So like for example, we own a frac sand terminal.
Yeah.
And frac sand, obviously we're making a bet on drilling and volume of drilling. It's also a NGL terminal. So it's a toll taker. It's betting on increase in volume, not necessarily on price. We've also invested pretty heavily in mineral royalties in different
Yeah.
regions as well. Because again, still you're taking a bet on price, but you're much more price insensitive as a royalty holder than an operator. So I
Yeah.
agree with you. I think you can say with almost 100% certainty that energy consumption will rise and continue to rise in the United States and the rest of the world. And if you're betting on that increased consumption and increased production, it's hard to get that wrong in the long run. That would be
Yeah.
my
Yeah.
assessment.
And
Hmm.
and and I think that even if there's economic downturn, these companies are still going to be creating cash. And my first book, as I mentioned, was on Enron, and Rich Kinder, who now is the one of the kings of the pipeline business in the U.S. He was famous at Enron when he was there. Before, he quit before of course, the bankruptcy, or left because Ken Lay wouldn't promote him. He said, "Show me where you're going to get the cash," and he was very focused on cash, and that's what the pipeliners excel in, is saying, you give us your money, we'll give you cash back. And that, I'm not a sophisticated guy, Jamie. That's a business model I can understand. You give them money, they pay you a little bit of cash back because you gave them money. And that,
Yeah.
again, it's not a home run strategy, but Rod Carew made a career hitting singles. So I can understand that.
All right. Well, Robert, appreciate your time today. Is there anything I didn't ask you, anything we didn't touch on you think we should?
I think, well, I'm sure there are things we could discuss, but I think we've gone pretty much around the world on different commodities, and it's great fun to chat about it because I just think these things are incredibly interesting from geopolitics, from investments, chemistry, all of these things, just fascinating.
All right, everyone, go check out Robert Bryce on Substack. I'm a subscriber, a very happy one. He does a lot of great work, and you'll get a lot more in depth than our conversation here today. Thanks a lot, Rob.
Thanks a million, Jamie.